Today, I want to talk about how major banks like HSBC and Goldman Sachs are about to be liquidated as a result of the major short squeezes we've seen in the wider market over the last month, and how these major banks have actually been begging for a bailout. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Bigham's tweet is saying this is the second day that HSBC has received the same notice from the DTCC. This notice is for a money market instrument issuer failure for HSBC Bank. Now it says Settlement Operations has received notification from HSBC National, the issuing or paying agent for HSBC Bank, that HSBC Bank refuses to make interest payments for this certificate of deposit that's due and payable through the DTC on the 6th of February 2023. Therefore, in accordance with DTC's rules and procedures, this issuer's interest payment will not be completed today. Now, as Bigham's pointed out, this is the exact same notification that Lehman Brothers received all the way back in 2008. Again, it says DTC has received notification from Citibank, the issuing or paying agent for Lehman Brothers, that the issuing or paying agent refuses to make interest payments on this commercial paper. Now, obviously, we know what happened to Lehman Brothers just a few days or a few weeks after this notification, which is basically saying that right now HSBC Bank are struggling massively and could potentially be insolvent over the next few weeks. But as I said, it's not just HSBC because there's some very strange things going on at Goldman Sachs. So it says that Goldman Sachs' online bank Marcus is offering an interest rate on its savings account that is 350 times the interest rate being offered by its competitors. And that's not normal at all. Now, importantly, it says Marcus is the online banking platform offered by Goldman Sachs Bank, a federally insured bank backstopped by the US taxpayer. But what 99% of taxpayers don't know about Goldman Sachs is that it's the unit of Goldman Sachs that also holds trillions of dollars in derivatives. And that's also including the kind of credit derivatives that blew up the US economy back in 2008. And according to the most recent report, Goldman Sachs Bank has $513 billion in assets, but $50.9 trillion in derivatives. And most worryingly of all, the most dangerous of those derivatives, credit derivatives, tally up to $623 billion, which is $110 billion more than the bank has in actual assets. So even if the entire $50.1 trillion of derivatives doesn't explode, they hold at least $600 billion in these ultra risky credit derivatives. And those $600 billion worth of ultra risky derivatives is actually more than Goldman Sachs has in cash assets. And that might help explain why Goldman Sachs is currently offering 350 times the going interest rate of its competitors to attract deposits and shore up its capital base. Similarly to how Citadel took on a giant loan to bolster their balance sheet and to shore up their capital base, Goldman Sachs seems to be trying to do the exact same thing. Now, we've also seen Goldman Sachs readying the biggest round of layoffs ever seen since the financial crisis. On top of that, Goldman Sachs have plunged their quarterly profit by 66% and taken a $972 million provision for credit losses. Now, you may be saying, Tom, why are HSBC Bank and Goldman Sachs in so much trouble right now? What's changed or what's happened over the last, say, 2 or 3 years? Well, as Roger Hamilton tweeted, the uptake or the usage of dark pools in the US has increased massively over the last couple of years. Back in Q1, Q2 and Q3 of 2020, the number of dark pool trades as a proportion of all trades was actually quite small. How obviously that changed massively in Q1 and Q2 of 2021. Obviously it used to be say 5 or 10%, maybe 20% of all trades, whereas now it's more like 75 or 80%. Now you may be saying, Tom, I wonder what happened back in Q1 and Q2 of 2021. Why did these dark pool trades increase so dramatically? Well, obviously, Q1 is when AMC and GameStop had their first run up, and Q2 or June is when we saw AMC's second run up. So it seems even these major institutions like Goldman Sachs and HSBC doubled down, tripled down, and quadrupled down on their dark pool usage and effectively manipulation through 2021. Also guys, if you haven't already, be sure to join me on Moomoo, the sponsor of today's video, down in the description below. You can currently get up to 15 free stocks, entirely commission-free trading and free level 2 market data. Moomoo is also very easy to use with a very user-friendly UI. It's got tons of technical indicators and advanced charting tools. But obviously after seeing the wider market squeeze over the last month, especially in names of smaller heavily shorted stocks like Coinbase, Affirm, Carvana, Bed Bath & Beyond and many others, these shorts have now lost billions. We saw an article just the other week saying that short sellers for the year of 2023, just in the first few weeks of January, are already down $80 billion. And that's why, as David tweeted, he said, I spoke with my broker today and he told me that Wallstreet is holding out for a bailout. He said the shorts have been bleeding heavily, especially over the last month. And as difficult as we've had it, they're currently in a really bad place. Now, obviously, this section here is some massive trust me bro information, but at the same time, we know these shorts have been losing billions and billions of dollars as it's been heavily publicized. We know that HSBC and Goldman Sachs are currently struggling, so it also wouldn't surprise me if they're specifically asking for bailouts. Or maybe they're specifically asking the SEC and the Fed to try and push the market back down further so they can close out of some of these short positions on these smaller names. But on top of that, as Stonks Batman tweeted, we're also seeing AMC on the threshold securities list now for the 4th day in a row. He said it'll be very interesting to see what happens with the record high cost to borrow while AMC is still on the threshold securities list. While these shorts are obviously increasing their shorting on AMC, it can't be removed from the threshold securities list. The only way they can get it removed is if they stop shorting and start buying some shares to remove those FTDs, or find actual shares to locate to get rid of those FTDs, which obviously they can't. But at the same time, they don't want to stop shorting and buy shares to resolve the FTDs, because obviously in this current squeezing market, that could be massively detrimental to them. If they stop shorting and start buying back millions of shares, especially with the wider market squeezes we've seen, it could absolutely cause an AMC squeeze. Now, something else that I think is also very interesting that I think also ties in as well is Watcher Guru tweeting saying that Robinhood has just reported a net loss of $1 billion in 2022. We're also seeing Robinhood using $500 million of their own cash to buy back Sam Bankman-Fried's shares. This way, the $500 million worth of shares won't be sold into the open market, crashing the price further, but Robinhood has to use $500 million of their own money. Well, that's $500 million that they basically don't have, as they already lost $1 billion for the year of 2022. I think Robinhood's going to start really struggling in 2023 because they're losing so much money so consistently and may end up closing down. We're also seeing Eleanor tweeting saying that SBF and his lawyers have filed an appeal to Judge Kaplan's order to reveal the identities of the 2 unidentified people who helped secure his bail package. The judge has obviously said we should reveal those identities, but Sam Bankman-Fried and his lawyer have filed an appeal against it. They obviously really don't want the identities of these 2 people being revealed, and they're trying to do everything they can to keep the identities hidden. I think that basically means that the 2 people that did co-sign on the bail package must be really bad news. They must either be on one hand literal politicians, maybe Joe Biden himself even countersigned the bail package, or some very heavily involved hedge funds like Ken Griffin at Citadel. Whoever co-signed this bail package did not want Sam Bankman-Fried going to jail or speaking to the feds, but also does not want to be identified. It says here that SBF and his lawyers filed an interlocutory appeal, a special kind of appeal that's rare and hard to obtain, but will ensure SBF's bail sureties are kept under wraps. As Jeremy tweeted, he said an interlocutory appeal is not very common and hard to win. Somebody really doesn't want people to know. As I said, I really do believe it's someone heavily involved not only in the FTX fraud, but also in the market in general, very likely a hedge fund. Whether it's Point72 or Citadel Securities or exactly who it is, I don't know, but I do think it's someone with a very big name. And finally, as Danielle tweeted, she said crypto companies are continuing to shed workers around the world in the aftermath of last year's bear market, taking job losses in just the first 5 weeks of the year into the thousands. We're seeing tons more layoffs at crypto.com, at Coinbase, at Kraken, and at many other crypto companies as well. This looks like it's nearly 6 or 7 or 8,000 layoffs in just the first few weeks of January. That suggests to me that many of these tech companies are still struggling massively, and there is likely more pain to be felt in the market. And obviously, especially if major institutions start being liquidated and start going down, we're going to see tons more pain. Remember, a lot of the pain that was felt in 2008 actually happened after the collapse of both Bear Stearns and Lehman Brothers. And therefore it could be that a major bank failing like HSBC or Goldman Sachs is exactly what's needed to start the next leg down in the market crash. I think especially a large name like Goldman Sachs announcing bankruptcy would be absolutely hell for the market. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.